Hey everyone, thank you very much for joining me. This is the morning market review. It's Tuesday, it's the 25th of October. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address rshaw@fxcm.com. Just want to do a sound check. Can you guys hear me and see the screen? Just want to make sure that's all good. Hey Zanetta, good morning to you. Nice to have you on the webinar and thank you very much for joining. All right, I'm going to just bring up our disclaimers. Here's the high risk investment warning. And our market commentaries disclaimer. Here's our references. I've just added Forex Factory. So I think it was Katie that suggested we look at the calendar, which I think is obviously a really good idea. So I've just added Forex Factory here. Let's have just a quick look at Forex Factory, then we'll go to Bloomberg. So there's nothing really that I can see that is stand out. We're going to see some consumer confidence come out from the conference board. I think that the FOMC members that are speaking, obviously we have to listen to them, but no real sort of big announcements. Thursday just remembers the ECB. I think that's going to be really important. So let's just keep that at the back of our mind. All right, I also want to bring up the real rate. This I think is again an interesting chart. I'd like to get your guys' opinions. Actually, we'll talk about this. But before we do that, let's go through the Bloomberg email, which is 5 things to start your day. The first headline reads Sunak's prize, and it reads, Rishi Sunak spent the summer trying to win the Conservative Party that Liz Truss would trash the economy if she became UK Prime Minister. He failed to win the top job then, but is now on the hook for cleaning up after her mess. Just 7 weeks after Truss travelled to meet Queen Elizabeth II to become Premier, Sunak will meet King Charles III on Tuesday to formally replace her. It marks an extraordinary turnaround in his political fortunes during an astonishing period that saw the death of Britain's longest reigning monarch and the exit of its shortest serving Prime Minister. Sunak is expected to keep Jeremy Hunt as Chancellor of the Exchequer as he seeks to calm markets and form a united government. The next headline reads Putin's threats. These are just becoming really scary. Ukraine's allies are increasingly concerned that desperation in the Kremlin over an unrelenting string of battlefield failures may lead Russia to escalate its war, possibly using a massive attack on a target like a dam or even a weapon of mass destruction. For the moment, there's no sign Moscow is actually making preparations for such a strike, even as it ratchets up the rhetoric, according to officials from NATO. These officials spoke on condition of remaining anonymous. Instead, the view among Ukraine's allies is that the Kremlin is trying to scare them into curbing supplies of weapons and other support for Kiev. So far, the intimidation campaign hasn't worked. The next headline, what rout? Monday's epic sell-off in Chinese assets was front page news from Hong Kong to London and New York, but for Chinese state media, it's as if the rout never happened. Instead, the country's top financial newspapers dedicated the bulk of their front pages to official news articles about President Xi Jinping. As it happens, Chinese stocks rebounded somewhat on Tuesday from the historic sell-off in the previous session as traders weighed cheap valuations against the prospect of market-unfriendly policies under Xi's third term. But the yuan continued to tumble, hitting the weakest level against the dollar since 2007. Next headline, costlier Apple. Apple increased prices for its music and TV Plus services for the first time, citing rising licensing costs, a move that risks giving rivals an edge in a fiercely competitive streaming industry. The company increased the price of Apple Music to $10.99 a month from $9.99. And that's effective immediately, making it more expensive than services from Spotify and Amazon. The price of Apple TV will climb to $6.99 from $4.99. And the standard Apple One bundle increases $2 to $16.95. Apple has increasingly relied on services to augment hardware sales, given that device upgrades have become pricey and less frequent. Coming up for today, European shares are poised for a flat start after more volatility in Chinese equities and a climb on Wall Street thanks to earnings cheer. EU and G7 nations hold a Ukraine reconstruction conference. The Bank of England's chief economist, Hugh Pill, is due to speak. The International Atomic Energy Agency holds a meeting of ministers responsible for nuclear energy. Expected data includes Swedish and Spanish producer prices. Novartis, SAP, Microsoft, Alphabet, all due to release today. All right. So this chart we have been looking at, fairly consistently for quite a few weeks, if not months now, which is the real rate. Coming into the fourth quarter, this overbought condition is something that was of interest, and the analysis sort of around that is that, but it can't stay overbought indefinitely. There has to be some sort of normalization because it's a weekly chart. When does it actually normalize? Because the normalization can take place over weeks, so the timing's difficult, but there should be some sort of normalization now. If there is a normalization in the real rate, generally what's going to happen is that risk assets such as stock prices should be supported, and I think we're starting to see that reflected. So we've got the DAX underneath. Okay, so we've got the last 4 weeks of DAX all blue candles, and the question here, of course, is what does this mean for the risk market? Does it actually mean we at the nadir? Are we at the market bottom? And of course, nobody really can say that with any sort of true confidence. I mean, we might not be, but I think what is certainly a factor is this overbought condition in the real rate. To the point at the beginning of the fourth quarter, one of the themes were Q4 does have a higher probability of a rally. That was something that, and now we're kind of seeing it unfold. The difficulty is this really real, or is it a dead cat? Is it a dead cat bounce? That's not so clear. So as long as the real rate continues to normalize in terms of just this froth, then I think the markets are supported. And with that kind of market action, we get news articles. We get news articles about the Fed perhaps not going forward as aggressively as previously communicated. Good earnings suggest market bottom. It's very difficult to not be affected by the news that's coming out as a result of what could really be just a technical correction. Now, the way that I think we should approach this is obviously as objectively as possible. I don't want to look at the news articles. I want to have some sort of an analytical reason behind behind a potential bottom. And I think the way we do that, of course, is we come back to the code block. So what we'll do is we'll throw the code block here. Let's just go through to DAX as the main chart. Okay, let's get rid of this guy. Get rid of this guy. Make this, let's just get rid of these peaks and troughs. I think they're going to throw us. All right, let's make this monthly. And let's throw in the code block. So we're at the 25th. So we're pretty close to the end of the month. Remember, we're looking at a monthly indicator. So we should get a fairly good reading on what's going on here. All right, so we've got the red horizontal, that's 0. And what's interesting here, of course, is that the gradient, so we've got this negative slope here for the code block. The gradient sort of starting to just become a little more shallow. In other words, the question we've got to ask ourselves is the code block turning up? Because if it turns up from below 0, well, that's a really good sign. It's not a flawless signal, but it would probably be something to keep an eye on. And we can also add a just a 3-period EMA just for timing purposes. All right, so this is something that we're going to have to monitor as we get to the end of 2022. Now, this is the difficulty, is in that if there is going to be a code block signal, it's going to be late. It's going to be late. So we're not going to be able to pick the bottom here. Now, we've just got to be comfortable with that. So instead of trying to guess if we are at a bottom, sort of err on the side of caution and we come in a little late, it shouldn't be too much of a sort of an issue if the bullish trend has legs. We should have months of appreciation. So the lateness. So we do have a few. This is a nice trend here, obviously from 2012 is a nice trend. This one was a good trend. Okay, so we won't be able to pick the bottom, and I think that's okay, because I don't know if this is a dead cat bounce. I think this is a technical correction for a frothy RSI. And I think that until we see the moderation in the median CPI, it's all noise. The Fed has to control that median number. So without that median number being controlled, this is, for the time being, for me, just a technical correction for an overbought real yield. So we just want to keep an eye on that. Having said that, I think that we can still participate in sort of the DAX. The idea here is, are we getting the low peak here? Well, there is. So we've gone now through to the weekly chart. There is certainly signs that the downward momentum has moderated. So we're out of that lower quintile. In fact, we're getting this RSI pretty close to crossing above 50. So above 50, that does suggest sort of bullish momentum. When does the next median data point come out? Yeah, it's monthly. So it comes from the Cleveland Federal Reserve of Cleveland. They're the guys that calculated. So we'll have to wait for the core numbers and the headline CPI, and then once that's released, the Bank of Cleveland releases it on their website. So I'm not sure when the next CPI out. I mean, the CPI comes out every month, right? But it should come out fairly soon. In fact, let's just bring it up. So you can see there's absolutely no moderation here. Okay. So this, I think, the Fed's. This is the Fed's battle. It needs to roll over. I think once it rolls over, we get a completely different communication coming out of sort of Fed. I think then the likelihood is, okay, we're starting to see the higher rates work, the sticky inflation starting to respond. All right, let's see now how the transmission mechanism effectively unfolds. Hey, Katie, nice to have you. Welcome and good morning. Alrighty, let's just go back to this. So you can see that we are in the zone 1 here. You can see that the daily momentum is positive, and what's interesting here is now that we do have a second crossover. The stochastic still got a crossover. Then, if we get that, we could be in for a bullish day. It's just that we've got to get the stochastic to about 80 and hold. And I think that once the sort of stochastic hits that upper quintile, then the idea is to see if it's going to hold or drop out. Of course, if it drops out, then the momentum is running out. Incidentally, so I didn't trade yesterday, but I did trade on Friday, and I was trading Nasdaq long on Friday. And I was using our scalping system. So I think there is some sort of benefits in the this sort of Q4 rally. Whether it's the bottom or not, I can't tell. Anna's saying, so we're going to see a flurry of volatility if the median read comes down. Yeah, so I think that if that median reading comes down, Anna, then we probably, I would suggest, pretty close to the bottom. Maybe we'd even be past it. You know, then we wait for that cohort to come up, because effectively, I think it's going to drive the next bull market, in my opinion, would be the 2-year yield moderating. And you see that 2-year yield moderating, then the inverted yield curve starts moving sort of positive again, starts steepening. So I think that's, for me, that's a huge data point, that median read. Could yesterday's US PMI be a harbinger of something special? Asks Chris. And let's just go back to yesterday. So what I think, what I think we've got to look for here is, whilst you see these PMIs are relatively important for most countries, but I'm going to suggest less important for the US. This is from a company called Market, M-A-R-K-I-T. Let me just bring that up. Market here. So what we look for is the IM PMIs on the US side, Chris. Yeah, this does look quite nasty, doesn't it? But I think the ISM numbers has a more market pull or push, so to speak. So just keep an eye on that, the ISM guys. Again, though, I would suggest for me that median number is like 90%, I think, of what's going to drive the bottom. So let's just keep an eye on that. Because let's just say that the median number does start showing some signs of moderation. Okay, remember, markets are always forward-looking. Markets are always forward-looking. So if there's some sort of moderation here, so let's bring up the 2-year. Okay, so you can see this is just a very, very nasty 2-year, and this is reflective of just the this reflects the aggressiveness of the Fed. If that median rolls over, then Chris, then I suggest 2-year rolls over, and if 2-year rolls over, I think portfolio managers are going to go to town. Really, they're going to just be picking up bargains left, right, and center. And as there's the flurry of volatility, right? But the key is it's got to roll over, and the reason being it's looking forward. So yeah, PMIs. Okay, so we saw the market PMI, they're really looking horrible, but economic activity will start pricing in forward activity. PMI should improve. We should get that lift off. We should see the bottom. We should see the bottom in the economic cycle. We should see the bottom in the stock market cycle. That's why I'm saying the median for me is such a important data point. I think, in fact, what we can do here, just to drive the point, let's bring in the median underneath this. And then we'll put in a correlation coefficient, right? And see what we're looking at. Just making it easier on the R. All right, let's throw in the correlation coefficient. So I mean, this correlation here, we're looking at a almost perfect correlation reading at the moment. Remember, correlation coefficients are bound between 1 and -1. This is close to what 1 is effectively 100%. Means they're moving lock stock in tandem, right? So you can just see the importance here. All right, let's go back to chart here. Okay, so now it's 10 past the hour. We've got the crossover, and then let's take a look and see what's happening on the euro side of things. Okay, this is interesting. Euro actually has rolled over. I would have actually perhaps expected it to be moving higher, simply because of that overbought real rate, which I think is having an influence. Let's just take a look at this on a weekly. Okay, nothing good. All right, so just to take a look at this candlestick here. It's only Tuesday, but we've got a, what do we call this, a doji star? Is that what it's called? I mean, it's a very uncertain candle. Let's go down to so we are in zone 1, but we reached this stochastic, horrible stochastic. We're right in no man's land. Okay, so there seem to be. Let's just go to the US dollar here. So you can see the dollar showing some sort of strength. That's interesting. I'll tell you why it's interesting, because DAX showing strength and dollar showing strength just seems to me, one of them seems to be mispricing at the moment. I'm not sure which one. I actually think it's the dollar, but you know, we'll see. I think the mood is certainly risk on. Let's just keep an eye on that. Zanetta, just referencing news again. I just want to bring up the calendar. All right, so let's just go to the right day. All right, so yeah, she's quite right. The German IFO business climate coming out, it will be my time 10 a.m., UK time 9 a.m., and this has got a sort of an orange factory, so this could certainly be a driver. Maybe that's what's the market's waiting for. Level of composite based on manufacturers, builders, wholesalers, so it's I think a decent index. Let's just get the histogram. All right, it's certainly not looking very good, is it? All right, let's go back to this chart. All right, so here, so interestingly, DAX getting a little bit red there. So let's just take a look also at pound, and I want to take a look at the Chinese market as well. It's in the news. So this was a very interesting chart for me. I think it's actually saying quite a bit. Reading it sort of correctly, but what you could see is that there was a gap open over here. So the market certainly was excited about the new minister. At this stage, we didn't know who it was going to be. Rishi Sunak was obviously the favorite. Penny Mordaunt was still in the running, but the market was very excited sort of about the new PM, but then it faded throughout the day. The pound hasn't behaved terribly since this gap, but it has drifted lower, and I think this is the market actually giving signal to Prime Minister Sunak, just saying, you know, we are excited, sort of, but you've got to prove yourself first. You know, the fiscal discipline has to come back, and once we see that, you know, well, that's what this gap is. That's the way I'm reading it. So it's saying, yeah, yes, okay, you're now sort of at the helm, show us what you got, type of thing. So it was very, you take a look at this on a daily chart, it was very odd, the price action. Take a look at this on the daily. It actually gaps open right into zone 1, and then it drifts down the rest of the day, and it's now just on the border. So this is one that we definitely need to pay attention to. Zanette is saying her daughter is studying economics. She's just started college and is now reading BBC News every morning. Terrific, terrific. All right, so we're going to keep an eye on this. Let's take a look at the China 50. I'm going to do this on TradingView. And we'll take a look at the COPOC, because the COPOC actually did give a false reading here, if I recall. So let's just bring it up. All right, and let's throw in the COPOC here. And you can see, let's put in also 0. I think it will make it easier. Okay. And I think I'm going to add in the 3-period EMA, but before I do that, I don't know, I'll show you guys this. So this was a false. So over here, the COPOC does kick up at this point, and it aligns with this really strong movement up in the China 50 index. And then, of course, prices just capitulate and the signal disappears. So the idea there is the COPOC is just a tool in your toolbox. It's not infallible. It's really the first sort of, I guess, tool that we use, and then we can start going top down. But if we add the 3-period as a filter, it certainly is going to help. So you'll see. Let's add the indicator here. Okay, so we didn't get any bona fide crossover if we added a 3-period as a filter. So let's see what happens with the China 50. It's really sort of horrendous at the moment. Not suggesting anything one way or the other. I was intrigued by the COPOC kicking up here. Right now, just getting obliterated. So it's just want to to study. All right, I think we can wrap up here. If there's any questions, please go ahead and type those in. All righty, let's wrap up. Have a good day, a good evening ahead, and we shall speak tomorrow morning. Thanks very much, guys.